Good afternoon, everyone, and welcome to today's webinar on WTI crude and natural gas options trading on the NSE. We're privileged to be joined by Mr. Anand Sheyon. He's the Associate Vice President, Member Relations at the National Stock Exchange of India. With over 20 years of experience in derivatives and the capital markets, Mr. Sheyon is a highly respected voice in India's commodities ecosystem. He has conducted numerous workshops across the country and brings deep knowledge of contract design, trading behavior, and retail enablement in energy derivatives. So today, we're going to learn how Indian participants, especially retail traders, can benefit from NSE's offerings in the crude and natural gas options. So let's dive right in, and over to you, sir.
Thank you so much. A very warm welcome to all the participants. Now, crude as well as natural gas, the energy contracts or these products which are available here in the country is very close to me because I have been working very closely with these contracts for quite some time. And from an NSE perspective, we had these approvals in 2018. So if you know, commodities per se was under a different act. It was under a different regulator also. And in 2015 only, the commodities was included into the securities, the definition of securities, and it came under SERA Act. Now, post which in 2018, NSE was allowed to launch commodity segment, and then came the COVID, the time frame where things went a little haywire. And in 2023, we started focusing on commodities, and these are the two contracts which we are currently focused on, and we are hopeful that we should be able to take this ahead. Now, why these two contracts is because these are the only two cash settled contracts available in the country as we speak. Very dynamic and I would say very easy to track and understand contracts, because this is a part of our day-to-day, I would say, exposures. We come across these commodities every now and then, though we don't realize. These two contracts, I would be just taking you through what these products are and what is so special about these two, and maybe towards the end, how the contracts look like. And maybe a post which we can have a discussion on what you want to know, or maybe you can share your questions online, which will take it up towards the end. So I have a small presentation to share. I'll just share my screen. Hope the screen is visible.
Yeah, it's clear, sir.
So I don't have to describe you what NSE is, right? So we'll just dive into the contracts per se. So before just a few minutes back, I was looking at a few numbers, and this was about the energy consumption worldwide. So I found it a little interesting. And India, our per capita energy consumption, which means the entire energy we consume, which includes fuel, electricity, everything put together, we are roughly around 7,000 kilowatts, right, per capita consumption. If you compare it to, let's say, any other country, for example, the easiest comparison would be China. It's about 30,000. So we are 7,000, they are 30,000. US is at around 70,000 kilowatt hours. So from an energy point of view, we are at a very nascent stage, from a consumption point of view. And this particular segment, when I say segment, I mean the energy segment. has to go a long way as the country develops and moves ahead, because the most of the development, production, everything is linked to this to commodities. Now, crude, you can see on your screen how these assets have performed. You can see that crude is either on top or it is right the bottom. It is a very, I won't say volatile, I would say it's a very dynamic kind of underlying, wherein anything and everything happening in the world has got some bearing on this. So the geopolitical tensions, whatever be it. Crude as a commodity, the production and the consumption is more or less, I would say, neck and neck. Any disruptions on either side, you have major price volatility happening. So they say we consume around 100 million barrels a day, the world consumption, 101 million barrels a day. I think we peaked, the global consumption would have peaked at around 105 or 106 million barrels. That happened in 2023, post which the consumption or production also declined, and you can see the prices have also gone down. Various reasons, various economic factors, geopolitical issues, which is there across, and markets have gone a little volatile than it used to be. So a lot of studies which are there, a lot of things to follow, understand in this particular commodity. I would focus on crude first, and then we'll come to natural gas. Maybe another 10-15 minutes, we should be able to get through and get to the questions. Crude, per se, a lot of things which actually impacts or people track in terms of how it behaves, how it performs. To understand all this, first we need to understand what this commodity is. Now, while in India we don't have any physical process wherein you can buy crude, you only have derivatives. But to understand this commodity, you need to understand how it performs globally. So one major understanding which is required is there are few varieties of crude available, of which one is WTI crude, or Western Texas Intermediate Light Sweet Cushing Crude Oil. Now, this is mostly drilled or made available in Texas and maybe Canada side and transported through pipelines, and they have a facility in Cushing wherein they store this. And it has been traded over the years in NYMEX, which is a part of the CME group. And these contracts are pretty active, and they have a delivery system wherein you can procure this from this the storage locations, Cushing. This becomes a little tricky because this is the best quality of crude available. They call this light sweet crude, okay? So which means less sulfur content, and they say it's a lighter, less heavy, they say. The specific gravity is a little lesser. Best quality of crude, but transported through pipelines, okay? And it is land borne. So generally there are issues in transportation. So you would have seen during COVID, the prices have gone negative for this because they had issues in making storage available because the consumption suddenly went down. There was no place to store. You cannot throw out crude just like that, right? So this is one variety, and this is a variety which globally people follow, because this has been there in existence for quite some time. This was a major variety which was available. Now, the second variety which is there is called Brent crude. Now, Brent is what is majorly exported. So even India or any other country, we import mostly Brent. Okay, and there is one more variety. When I say Brent, it's again a basket of this grades. Okay, so this is mostly seaborne. Okay, Brent is mostly seaborne. So you have this drilling infra in the sea, North Sea, maybe Russia, and it's all seaborne, transported through tankers, India, everywhere. The world consumption is mostly met by this Brent. When we talk about consumption, I think US is still one of the largest consumers. So roughly around 20% of the world production is being consumed by US. Second would be China. That will be around somewhere like 15-16%. And we would be, I think, fourth. We are only 5% of the world consumption, India as of now. So we consume around 5 million barrels a day. So Brent is one variety which we import a lot. And the third variety, which generally there is no markets to track, but as countries which are involved in this market, they're pretty active. It's called the Gulf variety, which is called the crudest of the crude. And India also imports a lot of this Gulf variety. And though the percentage changes over how the prices behave, but this is how, in general, broadly, how crude looks like. So it's more of who produces what, how much they produce. If OPEC says I am going to reduce, again, yes, there is a price issue. If there is a tariff war, which you would have seen between US and other countries, yes, there is a issue with the consumption dropping. So prices behave accordingly. So all this is one thing, and the next thing is how US dollar will behave. So all the commodities across the globe, if you see, is priced in dollars at this point. So anything happening to US, anything to do with the dollar has got an impact on the prices of these commodities also, because it is priced in dollars. If dollar is strengthening, means you need less dollars to buy the same thing, right? So same logic applies here also. If US is not doing good, you will see a lot of things. For example, you would have seen gold and other commodities prices going up. It's because there's a risk and there's the purchasing power, the inflation is increasing. So commodities has got a mix of these two. You have to look at the demand and supply dynamics, how the fundamentals work, as well as how the currencies fluctuate also. So crude is a wonderful commodity wherein you get a lot of data available, because it has been trading on the derivative space for quite some time. I'm not talking about India, I'm talking about the global market. And most of the markets, I mean, all the countries are dependent on this commodity in a big way. So directly, indirectly, people do tend to follow these commodities. US, because I told you, because it is in dollars, and we also have a contract which is based on the US markets, the WTI crude, okay, Western Texas Intermediate crude, which is traded on NYMEX. So we tend to follow, or the market tends to follow the US markets, how dollar behaves, how the US economic indicators work, or how the geopolitical tensions evolve. All these things play a major role. Plus, it's a very liquid market, and it is a good, I would say it follows more the technicals, the best among commodities. Okay. So getting data is not I would say, not very difficult, but getting the data at the right time is the most critical thing. Because you have a lot of sources of data, and a lot of data which is available free of cost is usually delayed. So when we have to interpret and understand these commodities, getting the right data at the right time is a very important, I would say, determinant for understanding things on time. Okay, so anyways, time is money these days, and the way the volatility is panning out, it is getting more volatile over year on year, you know. So crude per se, we have to watch out dollar, and we have to watch out the fundamentals which are working out for crude. We mostly follow NYMEX. People do watch for Brent also, because the contracts are based on NYMEX, and NYMEX being the superior variety, it's traded at a lower price than Brent. Brent is also light sweet crude, but they say WTI is a better grade. But in spite of that, if you see the US variety is trading at a lower price than the Brent variety. It's because they have supply constraints. A lot of oversupply is happening in US. You would have heard of shale oil, trying to get crude from some sand mining. A lot of things are there. So US is on a different path altogether. So the world has slowly shifted a lot of its refining capacity to based on crude and all. So generally, Brent crude. So generally, Brent is priced currently. If you see, Brent is priced higher than the WTI. So Brent is at around $65-$66 per barrel, and WTI is at around 62, 63 as we speak. So this is a very dynamic and evolving, I would say, commodity, and every day is a new dimension altogether. So I'm not going to contracts now. So I don't want this to be a very basic commodity presentation. So I'm sure most of you would know why commodities are there or commodity derivatives are there. So the price risk management, wherein if someone has exposure, yes, you come and hedge on the derivative contracts. There's a price discovery happening, which means n number of buyers and sellers coming together, and you get the perfect price there. And if you have any trading objectives, yes, and it's a global commodity, and you also do your part, because we are only 5% of the global market at this point, and which I'm sure will evolve, will go higher and higher the way our economy is growing. So these are the commodities we have at this point, of which we are currently focusing on. These are all approved and available, but we are focusing on crude and natural gas, and we are focusing more on options, because options we feel is a very dynamic and flexible instrument, and the support from the market also has been great. So the contracts we have is in 100 barrels. So globally, NYMEX also has got a 100-barrel contract, but the 1,000-barrel contract is more liquid there. So their flagship contract is a 1,000-barrel contract. But in India, we trade in 100 barrels. So if you ask me how much one barrel is, it's around, let's say roughly, I think 159 liters or something. Okay, I'm not sure on this. Okay, disclaimer. So we also trade in barrels. So US also trade in barrels, we also trade in barrels, but we trade in barrels in Indian rupee. So in USD INR also plays a major role. Indian rupee to US dollar. So if Indian rupee is appreciating, depreciating, yes, that will also have an impact on the markets. So that was on crude. Now quickly we'll just touch upon natural gas also. Now NG is a very volatile underlying. Okay, why? Because the market is comparatively smaller. Okay, comparatively means compared to crude, it's a little smaller. Natural gas is supposed to be the cleanest hydrocarbon. The cleanest. The hydrocarbon cannot be cleaner than natural gas. And it is available across now. India also is developing pipelines and the transportation systems, CNG, LNG terminals are there in a lot of places now. Slowly the pipelines are also getting laid. So this is the cleanest of the hydrocarbon, because they say this is methane based, which means one carbon atom and you have 4 hydrogen atoms. So the hydrogen concentration is higher and the carbon content is lesser. To compare LPGs, they say propane based, which means it has 3 carbon atoms. Okay, so this is the cleanest of the hydrocarbon, natural gas, and globally this has evolved as a industrial, I would say, or a heating input. So the Western world mostly when they go to winter, the NG is the fuel which is used for heating purposes, both industrial as well as heating purposes. So if you see the NG prices, usually the prices are a little volatile towards winter. So the prices used to go up a little bit depending on how much the supply is, how much usage is, how much intense the winter is. Okay. NG, they say, will contribute to a significant chunk in terms of energy usage going forward, natural gas. both in India as well as the global markets. So till now, a lot of the storage and transportation was a problem across the globe. So a lot of pipelines, a lot of facilities are coming up globally also, in India also. So a lot of consumption may shift to energy. Of the energy market, is completely transforming itself. The electric, when it comes to vehicles and all, a lot of usage, everything might be shifting. But again, energy needs to be produced. Electricity also needs to be produced. So we don't know in what format this disruption is going to play. But again, some portion energy production may shift to NG, renewable sources. We don't know to what extent it will work. But again, as the world progresses, we'll have more industries, we'll have more requirements, a lot of energy requirements would come up. So the usage also may go up. So there was a lot of anticipation. Okay, yes, this is the time. Yes, market might come up in terms of usage. So 2030 and all, there were people who were commenting. So I'm not saying that it is going to come up, but this is how the dynamics are working. So a lot of factors here. You can see the factors affecting prices, the inventories. So every Wednesday, crude, the US comes up with the inventories, how much stockpile they have. Thursdays, the NG natural gas inventories are there, and the economic factors are the I would say the US economic indicators like the inflation numbers on the non-farm payrolls, or anything has its own impacts on crude also. Geopolitical actions, this has been the critical thing for the past 3-4 months. In the OPEC, non-OPEC, and those are the major factors. So we currently looking at the NSE counters. We currently do roughly around, let's say, in terms of number of lots, around 1 lakh on an average. The last in May we did around 1.3 lakh contracts a day. This is on options, crude options, and the participation has been increasing steadily, and we have a lot of FPIs which are active on the counters, and around 240 brokers are currently live on this counter. So a lot of activity is building up. So the participation has been very encouraging on these counters also. So if you ask me why NSE Crude, so these are the reasons. So I'll just elaborate on a few. So the major one being something called fungibility of collateral. So if you have margins on any other segment, the same margins can be utilized against commodities also on NSE, which becomes a major ease of doing thing as far as the margins are concerned, both from a member point of view and as well as a client point of view. The second one I would like to highlight here is the transaction charges. So when it comes to cost of trading, the transaction charges on NSE are very low. I would say it is next to zero, next to nil. We charge around 100 rupees per crore on premium for options and 10 rupees per crore for futures. So it's as good as zero. So when it comes to the cost of trading, mostly depending on how much the brokerage is, usually you will be able to come out maybe in one tick. You may cover all your cost also, 1 or 2 tick max. Again, you have to factor in your brokerage. So the cost becomes a major saving when it comes to trading on NSE. So other than this, rest of the things you are already aware of about the platform, how strong the NSE clearing is in terms of the settlement guarantees and all. And all FPIs are already there on NSE on other segments. So it's only a matter of time when the liquidity kicks in a little further, and we'll have bigger, larger participants. And we are hopeful that this segment will grow a lot, because the way the country is going ahead, this is one area. Energy is one area where we think a lot of action will happen going forward, and that is the reason why we are here trying to let's say spread as much as awareness as possible, and telling, okay, this is available on NSE. Please have a look at this. and commodities has become an integral part of any portfolio these days. So it's a different, I would say, diversification thought which people might look at. So this is the fungibility I was talking about. So basically, any segment you have margins and you utilize it for other segments till 330, and then post which you may use the same margins for commodities also. So commodities markets are live from morning 9 o'clock till 11:30 or 11:55 as the daylight savings kick in. So it's a very dynamic market, and we fall in such a time frame that we can trade. We can watch the Gulf markets. We can watch the European markets, which starts by 1:30, and we coincide with the US markets also. So they start around 7 o'clock. So it becomes easy to track and understand the commodities better. So I think I'll end my presentation here, and maybe we'll open for questions.
All right, sir. So just a couple of questions. What are the key commodity contracts currently available on the NSE, particularly in the energy segment? We know for a fact that it is your crude oil and your natural gas. Are we looking at this as a particular going forward?
Yes, we currently have crude and natural gas. Both these are available in futures as well as options. Options, yes, we are kind of focusing on options a little more. So the liquidity is very much there. So these contracts are designed in such a way that it is accessible to any of the retail also. Any size of customer. So the contract size will be 6 lakh rupees is the contract size for a crude oil contract. So these are the two counters which are there, and these are the two counters which are cash settled also. And when I say options, these are options on futures. So there are different derivatives of options in the commodities market. One is called options on goods, wherein when the options expire, you have to compulsorily deliver and settle, and that is for gold and other commodities. But in crude and NG, it's called options on futures. This is there on other counters also, but particularly in crude and NG, the options on futures means on expiry, your options positions, if you are in the money, will devolve into futures. And anyways, futures is a cash settled contract. So these are the two counters which we have at this point. Yeah.
Next question is, according to you, why has there been a growing interest in crude oil and natural gas options among the Indian traders?
See, I would attribute it to mostly the volatility and the kind of information which is available. So if you look at the entire commodity segment, a lot of action is concentrated towards energy. And I would say maybe this is the largest traded commodity in the world, right? Crude oil. And gold also has got similar characteristics, but crude is one step ahead in terms of how it reacts, what data is available, how technicals keep up. So that could be the reason, I assume.
Another thing we'd like to know is how do these energy derivatives differ from international counterparts in terms of either structure, margin, or accessibility?
So internationally, this has got different lot sizes. So we trade in 100 barrels. US, they have two variants. So I think have a 1,000-barrel contract and a 100-barrel contract also. But there also the 1,000-barrel contracts are more active in terms of participation. So people generally tend to follow the more liquid counters, right? So internationally, yes, that is more liquid. And there are these Brent contracts also on the intercontinental exchange, which, yes, people do try and benchmark. But internationally, yes, the contract sizes are much larger than us. It's into 10. And on natural gas also, it is traded in MMBTU, million metric British thermal units. So if you ask me what that is, that's the one thermal unit is the amount of natural gas required to heat up 1 pint of water by 1 degree. Okay, so we trade in 1,250 million metric British thermal units, and internationally it is traded in 10,000 BTU. So this is the kind of differences we have in the market. And US markets, because we benchmark ourselves to US market, because we use their prices for the final settlement. We use NYMEX prices for the final settlement. We have a MOU with NYMEX, wherein we are allowed to take their prices for the final settlement. So how the settlement works is different here and there, because there they have a facility of physical deliveries. All right. So which is not possible in India with the infra we have. But otherwise, yes, the prices do. I mean, it's a mirror of what is there in NYMEX.
Right. So if we could understand what are some of the key factors influencing price volatility in WTI and natural gas, and what should traders really look at monitoring?
I would say to answer that, three things. One is the crude prices itself, how the fundamentals are working in terms of geopolitical tensions, how demand and supply dynamics work, how the inventory is shaping up. Second is the dollar, how dollar is shaping up, how the US economy is, because they are still the largest consumer. And is there any supply disruptions? I mean, from a let's say US dollar point of view, is it impacting their economy? So that is the second one. And third is how the Indian rupee is reacting to dollar. So all these three factors, yes, to put that in simple terms.
And what kind of risk management tools are available for participants trading in these energy contracts on the NSE, sir?
See, as I told you, we have options as well as futures. Now, when we say risk management, from an actual user point of view, yes, it's a different type of risk management. But if it is some other execution strategies, anything which a client might be experimenting on, yes, we have futures as well as options. So options, as I told you, these are extremely flexible instruments wherein you can decide on how much of exposure or risk you want to take. But from a hedging point of view, yes, these are derivative contracts and these are designed for hedging. And while I say hedging, these are leveraged instruments also, wherein you're paying a margin and taking an exposure for the entire amount. So these are risky from that point of view because these are leveraged instruments. So my advice also would be to look at how markets are and learn how things are before getting into this contracts.
So how do you see the role of commodities, especially energy, in the average Indian retailer's portfolio evolving like over the next 3 to 5 years?
See, I would say commodities per se. Anyway, see, if you compare gold, for example, gold was always a part of our portfolio from very early days. I mean, and then came the ETFs or the SGBs in those formats. When it comes to other commodities, from an Indian perspective, we have not looked at commodities apart from gold and silver as real investments. So I'm sure going forward, like the chart I showed you in the presentation. So you can see how much, what percentage appreciation has happened in certain commodities. So I'm sure people will eventually look at these numbers, and maybe I would say the percentage may increase. Globally, commodities is a very significant part of any portfolio. So I'm sure this will get replicated in India also, maybe slowly as more instruments are available and people have access to all these counters.
And finally, sir, for someone starting out in commodities, what's your top piece of advice or the one piece of advice to actually trade responsibly and hopefully profitably on the NSE?
I'll take the first part. I mean, trade responsibly part,
Yeah.
because these are being from the exchange side. These are derivative contracts, and which means on the risk scale, these are the highest. So understand your risk before venturing into any of the derivative contracts. Uh, while options may seem a little easy to trade, you pay a premium, but it has its own inherent risk. The premium itself is a risk, right? So, my piece of advice is understand the instrument first, understand how much exposure you are taking, how much risk you want to take, right? If you're hedging, you have to understand what percent of your exposure you are hedging. So all this you have to decide and execute. I would say decide beforehand before execution. So first thing is the risk is very high in this because these are very leveraged instruments, highly leveraged instruments.
All right, so I'm going to wrap it up for this. Thank you so much. Thank you, Mr. Anand Sheyon, for an engaging and comprehensive walkthrough of the crude oil and natural gas options trading on the NSE with the FYERS platform. Your insights into the evolution of India's commodity markets, the contract structures, and how retail investors can tap into these energy trades are absolutely valuable. And to all our attendees, thank you for tuning in. We hope you now have a clearer picture of how to approach the commodity trading with confidence and discipline. So stay connected with FYERS for more such Power Pack sessions. Until next time, happy trading and happy investing.